For those of us who live and breathe crypto, Bitwise is a name you want to know. They've been in the game since 2017 and now manage over 10 billion in crypto assets across 30 different solutions. Index funds, Bitcoin and crypto, equity ETFs, on-chain solutions, you name it, Bitwise does it. But here's what I really recommend checking out. Their weekly CIO memo. Every week, CIO Matt Hogan breaks down what's happening in crypto, like why Bitcoin's up or down, what the big institutions are doing, and the stories flying under the radar. It's sharp, it's free, and honestly, it's one of the best reads in crypto. Find it at bitwiseinvestments.com/CIO memo. Again, bitwiseinvestments.com/CIO memo. Hello again. We're back for REKT Vision. Been another eventful week, it feels like, in crypto. We're currently selling off as per usual on a Friday, but it had been a better week. Bitcoin did get as high as around 94K and then retraced slightly as the show has gone live. Just a typical Friday, it feels like. We have Ejaaz on again this week. Obviously, you guys all know him. Focuses a lot on the AI space, has its own podcast show as well, and running his own fund. Thanks a lot for coming on, Ejaaz. Always love having you.
No, thanks for having me on. It's such a time warp when I kind of look at the crypto side of things and the AI side of things. Like it seems like on the AI side of things, I don't have enough brain cells to focus on everything. On the crypto side of things, it's kind of been like, oh, we're chilling, and then suddenly this week, like markets resurge. So of course it's Friday and everything is dumping whilst we film this.
Yeah, every Friday I get wheeled out to the market dropping about 3 to 5%. It did feel there was a lot of talk. Oh, that was the bottom. We touched at 80K. Then we had a very strange retrace on Sunday night where we just dumped. That was the first day of the month, so there was some talk about some of the CTAs or algo funds
Mm,
selling as soon as we entered the new month. That got absorbed. We made a higher low, which was slightly good, I think, for everyone. And then there was talk, we had a very aggressive surge back midweek. Everything went quite a lot higher. And now that's being tested again. It's interesting right now because I feel like people are saying the crypto trade is, it's over, cycle's over. And they're also kind of saying it in the AI space slightly. I see increasingly people are saying, it's over. There are obviously some missed targets by certain of the Mag 7 when it comes to use of some of the AI capex they've been doing, and it just suddenly felt like that turned. And then it kind of has reformed into, oh, actually, everything's going to be okay. It's just Google's going to be the winner now. What's your
mm.
take on whether we're anywhere close to a cycle top in AI? And then we'll go on to crypto afterwards.
Sure. Um, my simple response is I don't think we're at a cycle top for AI. You might hear that and say, well, okay, he's just a perma bull. Largely, I have an optimistic take over the long term, but I am pragmatic when it comes to the near term stuff. And so I've just dug into the numbers. And the fact of the matter is, whether you're NVIDIA, whether you're Google selling TPUs, whether you're now Amazon entered the fray this week selling their own Trainium chips, you're all going to be a winner for one simple reason, which is demand is just outstripping supply massively. People can't get their hands on enough of these different things. So the Google thing that you referenced this week or over the last couple of weeks is Google produces their own GPUs in-house. They're called TPUs. It stands for Tensor Processing Units. And the reason why it's got so much attention recently is not only are they around 30 to 40% cheaper than NVIDIA's GPUs, but in some cases, they're a lot better. They're like 1.5 to 2x better than NVIDIA's latest GPU. So obviously, everyone started thinking, well, hang on a second, is this true? And then Google dropped their new Gemini 3 model, and it absolutely blasted every benchmark, putting them way ahead in the lead, crushing ChatGPT, putting Sam Altman to call in a code red at the company, which we'll get into later. And so everyone was like, oh, Google is the new NVIDIA. It's not as simple as that. NVIDIA still holds the market monopoly. Remember, the constraint comes on one very tiny little island called Taiwan, where TSMC is based, where they kind of produce all the chips. Google uses or relies on the same company to produce their TPUs. The fact of the matter is, Jensen Huang has purchased about 65 to 70% of their supply capacity over the next year in 2026. So that remains the top constraint. But again, going back to how I started off answering this, the demand outstrips supply. So Google, whether they're using TSMC or going to figure out their own supply chain, will also win. Everyone's winning at this point.
Yeah, I looked at this as well, and it does feel as though it's more NVIDIA that's now under the microscope. I actually
Mm,
think Google is a much stronger company to lead
mm,
this trend. Do you know what I mean? Like the business makes a disgusting amount of free cash on a range of different businesses that it does.
mhm,
That it's now leading I think is just a stronger leader. Whereas Nvidia was always a very high forward multiple
yeah.
of sales. Google, I mean, you have Warren Buffett doing one of his final trades and getting
Yeah.
into Google, right? It suddenly feels as though there's a lot more healthiness, I think, to the AI trade if a business that is that free cash flow positive is running it. It doesn't feel like, for example, the dot-com era where nobody was showing
Yeah.
any sort of free cash flow and when we just had it all collapse. If Google's leading it, you kind of get it.
Well, you actually make a really good point. So you mentioned two really good points. Number one, on free cash flow. What you're referencing there is okay. So every critic's response to the AI thing is that we're in a bubble, and the reason why we're in a bubble is implied because everyone is levered up buying all these GPUs. That's simply not true. The top purchasers of GPUs or AI infrastructure in general are the Mag 7 companies. Guess what? These Mag 7 companies are using the hundreds of billions that they have in their war chests to buy these things. And it is being funded by the other profitable parts of their company. So Google buying and investing in TPUs is simply using their ad revenue that they get from it. Amazon's doing the same with their ad and retail and cloud service revenue, right? So the point is, like, they're not levered up at all. In fact, you're just using free cash that they have available. So that, by the definition of a bubble, isn't true. The other point that I'm making that you mentioned is, Google just has like a really cool business. You're right. It operates in a separate game to NVIDIA, in my opinion. Remember, Google isn't just a GPU manufacturing giant. They have the software stack that fuels that. You got Google Cloud that they use to kind of like service and kind of surface all the TPUs that they have. Then they have the apps. They have the number one browser. They own the Android market. They have search. It is just crazy. So they have the distribution as well. It is a different game. Like, Google could just continue making TPUs for themselves and still be massively, massively successful. NVIDIA is just kind of like focused on the GPU market, and that's where the expertise lies, right? And then the final thing I'll say is that originally Google wasn't really thought of as being a direct competitor to NVIDIA. That really changed over the last 2.5 weeks. Actually, in the time since we had our last episode, the last time I came on this show, which is they started selling TPUs to Anthropic, to NATO, and Meta, all to the tune of tens of billions of dollars. So now they are kind of like entering that market, which is why there's been such a discourse around it.
Yeah, I also have been a big admirer of Demis Hassabis
Oh yeah.
for a while. It seems like in him, you've got almost the product guy for AI as well. Like, he's
Mm.
obviously behind DeepMind, which has been, they've won, is it two Nobel Prizes now, or one? And
It's one, yeah, yeah,
if anyone's going to find the thing that will turn AI into these incredible products in the future, I feel like he's the right person
yeah,
to do it
yeah.
throughout the whole business.
Yeah, I mean, did you see the Thinking Game documentary which got released
Yeah, this
over the
is.
last couple of weeks?
I mean, I watched the one of the original one, the the
Oh
the, the
yeah,
AlphaGo one, and I
AlphaGo,
remember
yeah.
him from that. And then I saw an interview with him. I think um, it was not Joe Rogan. It was the other guy who lives in Austin who does the interviews. But I've seen an interview with him before and thought, wow, this guy might be one of the smartest people I've ever seen an
Mm,
interview with, because he's one of these very smart people that who can explain things very well.
mm.
Like, I think that's a very good way of appreciating if how smart someone is. He's incredibly smart and also can explain things very simply. So yeah, I think he's the right man.
No. I mean, what you were getting at there is founder-led companies, right? So, like, the company can have everything, but it could still die if the founder kind of sucks. Demis, if you guys haven't seen it, the Thinking Game just got released, I think, in the last week, and it's now made free for everyone. It is the story from the AlphaGo documentary that you mentioned to where we are now with like him trying to solve protein folding and everything. Just Google's AI models are so much more than Gemini and the chatbot era, which everyone seems to be familiar with. Like, you've got Gemini AI, you've got Google AI models that are solving major medical disease and cancers and stuff like that. They're finding like cures and experiments which no human has ever found before. Their science AI department alone is absolutely insane. So definitely give that documentary a watch. But yeah, Demis is a absolute beast.
And then bring it back to crypto. Um, what about there? What's your view on
Yes,
this? Like, when we last spoke, I mean, it feels so long ago in between each times we speak, but I think Bitcoin was
mm,
probably above 100K when we last spoke,
it was.
and we were holding on to what felt like will they, won't they on a 4-year cycle. We had a pretty ugly
last month, and then we had this kind of euphoric bounce, of which we are continuing to dip as the show goes live. I'm seeing this live on screen. We're down to about 88, 89K on Bitcoin right now. What's your view there? Because I think some people have been pointing to the idea that the AI trade is kind of causing the crypto trade to diminish. We've had this massive rotation away from crypto, really. I think is like a focus, and then you've had the deviation from M2, which has gotten people scared.
Yep.
It's just, for me, I have been cautious kind of since we broke down kind of above 100K, knowing that next year could be very, very strong. Do you? What's your view here?
Well, let me start answering this by asking you a very quick question, which is, how do you feel over the last couple of months? Do you feel tired? Do you feel a little exhausted?
I think there is a little bit of that. Yes, I think when I've now looked back at how long it's been since, let's say, the last bull cycle started, which is when we broke through like 25K and just started going up from there. A lot has happened. Like, this has been a long euphoric stage, at least for Bitcoin. So I'm unsurprised that perhaps we're having a little bit of a test.
For sure. And I think the rest of the market shares very similar sentiment, right? So let's kind of like retrace a few things. When we started getting euphoric back in, was it the end of 2023, which is, like it's like two years now at this point. Everyone thought, okay, 4-year cycle is starting, right? Then at some way midway through that, everyone was like, you know what? Maybe the 4-year cycle doesn't actually work in this new paradigm where you've got Bitcoin ETFs, and it made an all-time high before its halving, which has never happened before. So there was a lot of different things, but people were still uncertain, and therefore they were hopeful. And then 10-10 happened this year, and now Bitcoin's broken below 100, and it just broke below 90K as we're filming this. And I think it's becoming more certain to everyone that, like, that 4-year cycle mirage is definitely like, it's been broken. Like, that illusion is no more. We are objectively in a different state right now. And there are good and bad things for this. It's good in the sense that it's typically a sign that the market is maturing. It typically implies that there are different players involved trading these different assets, valuing these assets in very different ways. And the good part is, it means that there will now be different perspectives that are valued. And when I say different, I mean more mature, logical perspectives that are valued. Like, typically, you would operate in a market where it's like, oh, it's just meme coins, whatever, just throw your money in a Ponzi and fingers crossed, right? It's like gambling. I think we're in the painful stage of adolescence, where we're going to be maturing into an actual financial class that is taken seriously. But the truth is, which no one really wants to talk about, is it's going to take a bit more time, right? I tweeted about this a few days ago. Paul Atkins kind of announced that, okay, hey guys, I know I've been silent for a bit, but the Clarity Act, it's going to get passed probably in the next couple of months. Hang tight, we've got you a framework, and it's going to be good. It's going to give you crypto founders in the US and wherever you are some legitimacy and freedom to kind of launch a token without worries of the SEC and CFTC coming down on you. That alone will be a major unlock and will allow founders to start building legitimate products without being worried, right? And have the support of the US government. That's one thing. The other thing is, you have the likes of Stripe, JP Morgan, NASDAQ tokenizing every single asset and bringing stuff on chain. That's going to take up some time and process as well, right? You've got banks that are starting to open up their doors to more inflow to buy and purchase crypto assets, right? So all of these things are happening at the same time. You've got like the crypto founders that are finally, can come out of their kind of like holds and not be in fear of building the thing that they want to build. And then you have the capital, which was initially cautious, now being given the approval to kind of come in and lean in. These are coming in at the same time. It's just going to take a bit longer. That's probably, at some point in next year, we're going to start to see this. And then finally, on the sentiment side of things, right? The final point I'll make is it's kind of like peak kind of depression at this point. On the timeline, no one's talking about crypto. Everyone's talking about AI. I'm the biggest hypocrite here, right? And so that's arguably a really good time to start kind of like reallocating or being, cautious about it. But it'll take some time.
I think patience is the only thing that kind of is a solution to this. I do think that just the tone of the market, it feels as though we need I wouldn't say a new set of believers, but we need the belief to be tested, as clearly a large amount of crypto total market cap has transferred to a different buyer base. And I think this is going to be the first test of that, in my opinion. I'm hoping that bottom is in from around 80K, at least on Bitcoin. I would be unsurprised if we test kind of where we were in March, which was kind of low 70s, and then even like lower than that now. But again, I also think that this could just be a sell-off in relation to this year, and we kind of bounce back next year. I don't have a conviction about whether to go aggressively long or short at this stage. I don't really though I've definitely reduced my position since we went down past 100K. I think it's going to be a resolving the just like a testing of the resolve of the market, and we're seeing that most obviously in things like the DATs. Like
Yes.
if you were thinking, that's not really the case. It's very clear that everyone was looking at MicroStrategy this week, for example. They came out and it looks like they have essentially pre-funded the next couple of years of dividends by issuing more stock. MicroStrategy bounced on the back of it. I think it's not having a great day again today, but it feels as though the DAT trade being tested is perhaps, I would now point to as being the most obvious pain point here in the market, because about a month ago, I would have said it could have been a few different things. I would have said it was the AI trade, which was which was starting to sell off about a month ago, and people were starting to get a bit worried. Then you had worries about privacy and that Zcash was going to take over. You had the 4-year cycle, and then you had the DAT trade. I would largely say that 3 of those are in our rearview mirror now. The 4-year cycle stuff, if you're selling now for the 4-year cycle, we're well past that. So I think largely that would have happened in terms of amount of sales. And we even saw some of the bigger cohorts of Bitcoin groups, let's say, buying this week. The AI trade kind of just rebounded, not to the same level as the high, but did rebound. And it seems like it's changing who's going to be the main winners at this stage, rather than necessarily it being exhausted. And then Zcash dropped about 50%. So now I feel like the most obvious candidate is just the buyer base that came in was the ETF and DATs. And now they are obvious pain points as we go lower, or they're just going to be tested. They're going to test the ETH DATs. They're going to test the Bitcoin treasury companies. And Saylor is the number one target for a lot of this. So I think I look through the Saylor situation, and I'm not bullish on MicroStrategy. I do think that situation, the only solution I see is either him selling Bitcoin, or taking out all of the dividend paying converts or prefs, so he doesn't have an ongoing cash need. I don't think it's going to happen anytime soon. I think we're talking 2 years down the line now. But I do think that it is right that has been tested, because I never really saw the massive appeal of these DATs, if I'm honest. Like, they always felt like they were just some financial engineering and that everyone was going to get behind them. But when you started asking questions like, well, why would any of them trade above MNAV? The answers all seemed kind of strange. So I do think there's a test of this. Do you have a strong view on those at all? And Saylor maybe particularly?
Yeah, so my view on MicroStrategy is similar to yours, which is with all these DATs, I'm like, okay, but like, what actual value are you building on the actual chain or coin that you're purchasing, right? Like, whatever, like, you can invest in these things, but at the end of the day, you need like a real economy on top of these blockchains to make it kind of like financially feasible. Otherwise, you're just kind of like stacking a pyramid scheme, right? So that's my take on like the DAT side of things. It is very dependent on an ecosystem which the DATs aren't involved in at all, namely the builder ecosystem, the app ecosystem. On Sailor specifically, do you remember during the last bear market where Sailor was just buying Bitcoin every damn month, right? And a lot of it. And everyone was like, he's going to run out of money. This guy is insane. We were bearish. We were bear posting. And then it turned out in hindsight that that was part of the bottom. And, he ended up surviving for all those years. You just told me, right? And you just reminded us that he's kind of like pre-bought a bunch of Bitcoin or like available funds to be able to keep purchasing Bitcoin over the next, couple of months, years. He's like and I mean this in the best of ways, like a cockroach. He just survives. He's able to kind of like figure this out. So if anyone's going to pull off the DAT trade, it's going to be him. I have to give him his credit just based on historical stuff, but we will see. And then the other kind of wider point that I want to make here is when I hear you speak about this right now and how you feel, it is very similar to myself. And the way that I kind of think about it is there just doesn't seem to be anything inspiring being built in crypto right now, right? What was the number one topic trending this week? It was Hosib and Santi going head to head on ThreadGuy's stream to debate like whether blockchains are valuable, right? And the point around here is like pro blockchain or like pro base layer, like an L1 is it's good, it's got value, block space is valuable. And then on the other side, it's saying like, well, but you need some kind of demand, some kind of apps on top of it to kind of like make it valuable, to make the block space valuable. And that just kind of summarizes what you and I are talking about. It's like we're talking about like DATs, we're talking about like L1s, we're talking about maybe ETF people will buy it. But the fact of the matter is there's no demand. Like what's the difference between the crypto side of investment and the traditional AI side of investment? On the traditional AI side of investment, there's a million apps that are being released every single week that people download that are breaking Apple's top charts every single week that you could use, that you can test out. Are they all bangers? No. But they are customers that are willing to pay a subscription or a one-off payment to actually use these things, to test these things, to kind of engage, to like accelerate their coding or whatever the hell it might be, right? There's an audience for it. You don't see the same on the crypto side. It's like on the crypto side, it's like, hey, well, the equivalent would be we're launching all these models, but no one wants to friggin' use these things. That's the difference. And we're feeling a little disillusioned around it. At least that's my take.
That's a very good way of putting it. We've got a bunch of models. We're waiting for the apps to be built. That's been a case for crypto for a long time. I think, honestly, it's because some of the more obvious use cases were always beyond us from a regulatory standpoint. Things like tokenization, payments. I do think that sort of stuff is scaling fine. They're just not as interesting, let's say, as some of the others.
Correct.
One that has, and we've spoken about a few times on this show, is prediction markets. People continue to think that using the rails of crypto could be very, very big. We had, I think, the Kalshi CEO or co-founder going on stage this week saying he thinks that prediction markets can be bigger than the stock market. Apparently, it's only about a 10 to 100x, I think. No, I think it's a 10x in terms of volume to match like the US stock market for volume going through prediction markets right now, which was a crazy stat when I saw it said to me. Do you think that could be it? Are we just prediction markets, other forms of, let's say, degen activity? But prediction markets, his case was that they're far more engaging than the stock market and they're far more isolated. So if you are really going to get analysts come together and bet on a particular outcome, let's say a company's earnings or if the price of oil is going to go up, that these sort of markets are far easier for people to engage on and they're far more easy to isolate the decision on. What do you think about that? Do you think prediction markets it does seem like they're the one shining light here of crypto at the moment in terms of applications.
Yeah, I would agree with you. My prediction market thesis is as simple as follows. If they are able to make illiquid markets or illiquid betting markets liquid, they will make an absolute killing. And here's why. I went to my girlfriend's Thanksgiving celebration, right? It was Thanksgiving was like last week or something, American holiday. And she has a bunch of cousins that are in their teens. And so I was chatting to them and I was like, out of curiosity, like what kinds of activities do your friends get up to, or do you get up to? And they were like, yeah, like we use a bunch of apps. I'm like, what apps? They're like, oh, Instagram, Snapchat, and stuff. And I'm like, oh, cool. And what else? They're like, well, there's Rubets, there's Stake.com, this, and I'm like, well, hang on a second. Those are betting apps, and they're like, oh yeah, we bet like 2 to 5 times a week. And I almost like spat my coffee out. I was like, well, what do you mean 2 to 5 times a week? They were like, yeah, we're placing bets on different like sports games and stuff. And I'm like, are you watching the games like on your own? No. We meet up with each other. We hang out, we drink. All my guy friends do it. They love it. In fact, one of my friends bought this thing called a meme coin. And I was just listening to this and I was like, okay, so the future generation, and by the way, this isn't an isolated story. I have asked so many of my non-crypto friends, because all my crypto friends are like degenerate gamblers anyway, but I was talking to my non-crypto friends. I was like, especially the younger ones, I'm like, hey, like tell me what apps you guys are using, because that gives me a sign of like what the future times might look like, what behavioral habits might be embedded in the future. All of it, whether fortunately or unfortunately, depends on which side you stand on, points towards a hyper gamblification of everything, right? I scroll Instagram, I see my sister scrolling Instagram, and their ads Kalshi is just putting out over and over again. And they're really engaging, they're really social, they're really memetic. So kind of tying this back to prediction markets, I think prediction markets will be the investing app for Gen Z and below. Growing up, I think they're going to use it as their investment account. They're going to use it to bet on different things for a few different reasons. One, the traditional way of investing, go out and buy real estate, is just out of their grasp. They can't do it. The salaries aren't increasing in line with property prices. They're getting disinherited by a bunch of their like family members. There's the generation of wealth that's passing through hasn't quite happened yet. It's supposedly meant to hit sometime between 2030 and 2035. So the point is that they're desperate, right? So where do they go to? Well, if they can find an outlet to bet on the things that they know that they're inducing brain rot every day on TikTok or whatever, social memes, then they're going to funnel their money there. And I understand this is a very a tinfoil hat kind of view, but I do see that trend of hyper gamification happening. And I think the likes of Polymarket and Kalshi will probably, right now at least, be the facilitator of it.
Yeah, it does feel like Polymarket is going to come out with a token at some point next year. Yeah. Obviously, got
the app went live this week.
Yeah, in the US. It does feel like some of the stuff you said, it is been a way to circumvent or pre-regulated, let's say, gambling in the US, and some of the states are fighting back. Last week we got, I think, Nevada came through and said, look, you can't do this here. This is actually sports gambling. And I think you're going to see state by state battles, because a lot of the states make a lot of money from this sort of stuff. So I think it is remains to be seen what they can do. But I agree with you that it is, if you look at a traditional sports book versus a prediction market, UI UX is often slightly more friendly. It's like, oh, percentage of this happening versus this happening, rather than you must have been to like a UK bookmaker. Like, they're very different ways things are represented, and you're not just betting on sports. You can bet on who's going to be the most searched for person on Google. Who's gonna is how many copies of Taylor Swift's album is gonna sell? Like, this is stuff that is engaging for just so many different pockets of people that I think it is going to scale. I agree with you that the main thing there then becomes like liquidity and ability to like actually have a functioning market. So it probably gets compressed to a few like very big winners. But I do see this as it's a strange time, because although you're saying like nothing's really been built in crypto for a while, I think stuff has been built, or like stuff is happening, but it is generally just a bit boring for all of us right now. Like, it's the scaling of stuff in TradFi, or I guess prediction markets, but it's not the 10x coins where it feels as though, wow, they're going to hit product market fit. I haven't seen anything like that. It's not.
Yeah.
It's interesting that the utility that everyone has been screaming about needed for crypto hasn't come from a single coin. You know,
Right.
like everyone
Right.
had all these like, oh, this is what we're going to do with crypto when it happens. Not one coin has rallied off the back of that, apart from maybe Zcash, which is kind of like a little bit going back to crypto's original roots of privacy. It's just been a strange time that I think although the utility and use of crypto is going up, our assets are not. And that, I think you pointed to a very good debate this week, which was maybe that is the case for L1s. Maybe these sort of crazy high valuations where Solana is trading at 500 to 1,000x revenue, and I don't know what ETH is, but it must be just ginormous at this stage.
Huge.
Maybe they aren't justifiable. You know, we're going to find that out.
Okay, so I completely agree. And listen, that sounds kind of like, oh, well, what are we even doing this for? Like, should I have just bought Bitcoin over the God knows how many years, right? It's not as simple as that. Regulations have held us back a lot. And let's be honest, so many people bought these tokens in the hope that it acts as a pseudo equity instrument, that it represents ownership and dividends in the form or in the same way that stocks and equities do. Now, the Clarity Act, I think, is going to be step one of many, many steps. That's why I say it's going to take a bunch of time to eventually result in tokens acting as equity instruments. When that happens, when it becomes the number one instrument to IPO your company, whether you're a crypto native or whether you're a AI tech bro, that's when crypto tokens like do really well and they're valued in a different way. It's as simple as that. And to kind of quickly kind of round up a point on the prediction market things, I think the reason why it's kicking off so much and getting so much attention in crypto mindshare is for a few reasons. One, it is like mimetic. People can talk about any kind of topic and relate it back to prediction markets. Hey, did you see the game? Yeah, I bet on it using Polymarket. Oh my God, did you see what Trump said? Yeah, I bet on it on Kalshi, right? It's mimetic value, which is what Twitter and crypto Twitter specifically is known for. And then the other really cool thing, because you pointed out, like, Ejaaz, you're kind of bearish on crypto products, but we have had some good ones. You're right. And one of the good characteristics on prediction markets specifically is the anonymity part, right? So a few weeks ago, actually, when we, I think, filmed our last episode, Brian Armstrong went on his quarterly earnings call, and at the end of it, he said a bunch of words that were unrelated to the call, purely so that one of the prediction markets, which were betting on him saying these words, would resolve. Now, anyone would say that that was insider trading, right? And his kind of view, he went on an interview with Larry Fink yesterday, and he was asked, like, hey, do you think this is insider trading? And he goes, no. And this week, right, it was revealed that a Google employee, an insider, was making millions of dollars off of betting on prediction markets when Gemini would release and stuff. Now, the one side of it is like, this is insider trading, this is bad. The other side of this is, well, if you can get more accurate information and allow publicly anyone that can get access to prediction markets, because it's all on chain, to invest and bet and get that alpha ahead of just like the insiders of a company, is that good? Is that bad? Is that more morally ethical because now everyone gets access to the same types of information? Does it make markets way more efficient, especially if they're running 24/7? These are all precursors to a world where it's just so fluid. You can trade 24/7. I've been buying equities and stocks a lot over this year. It is just so archaic. It's so annoying where I'm like, oh, wow, I just read this amazing thing, or I just made this amazing revelation about this thesis. Let me buy some Amazon stock. And then it's like, oh, it's freaking the middle of the day on Saturday. I can't do this. And it's super annoying. So eventually we will end up in this space. And I think, whether you're an L1, whether you're an app, it doesn't matter. We will eventually end up in this future. It'll just take a bunch of time. Sorry for the rant.
Yeah, you made that the Google one I thought was very interesting because I saw the same thing and I agreed. Like Kalshi, I think it was, or Polymarket, they basically said that we take a very bad line against insider trading, but once you have this many markets open on this many things, it's difficult to firstly regulate that, but also like these aren't publicly traded stocks. Like when this comes with insider trading, it's because you have material non-public information about a publicly traded stock. This is not that. This is essentially a bet which you have insider information on.
Yeah.
If somebody else wants to take the other side of that, I think most users of these sites also are very much aware of insiders, so to speak. Like I don't know if you've ever been on these apps or watched streams of people that are talking about them. They're constantly talking about who are the insider wallets to track them. It actually becomes part of the edge of the market to track who are perceived insiders for a range of different things. You know, like, and I think that is, I just think it's probably, like you said, it gets us to a slightly easier point of truth quicker, even if somebody benefits from it. I think it's in some ways, I think it's on the companies rather than Polymarket to police that. Do you know what I mean? Like, if I was at Google and I found out that somebody was doing that, I might be annoyed at them leaking our information early, and that person might lose their job. But I don't know if that's Polymarket or Cauchy's issue necessarily. Maybe it's a bit fluid about where that lies.
Whether that's a hot take or not, I agree completely with you. That's the point I'm getting at. It's like, you don't blame AWS because it facilitated a nefarious financial transaction, right? You can't do that. It's not Basil. It's not Andy Jassy's fault, right? You got to, the companies themselves need to police and regulate it. And I'm not condoning like insider trading. I'm just saying that these are just more efficient tools towards getting to the truth. And I don't think it's entirely black or white in terms of whether that's right or wrong from Cauchy or a Polymarket's perspective.
What do you think about the other trend? So just finally, before we go to questions, so get your questions in if you want to ask any. Privacy, which was very hot. It probably came and went by the time you had the last show, but Zcash went from 100 to 700. Now it's back to around 400. Yeah. There's a lot of talk about the different privacy protocols, whether in a post-AI world, any of this is really will be private because we'll just have these bots that are able to kind of decipher a lot of this. And there's a separate trend about people worrying about quantum threats to different chains at the moment. You've been around crypto for a long time. You must have been around kind of when Zcash was popular last cycle and the cycle before that. What do you think about this more recent trend back to privacy?
Okay, so my train of thought around this is as follows. When crypto was founded, it was based on the premise of transparency, decentralization, and distribution, right? And privacy was heavily baked into this originally. It was like, own your own cash. You don't need to reveal what your name is on your bank account. Just use a Bitcoin address or whatever, right? So this was like one of the founding cypherpunk principles, right? And at some point since then till recently, it kind of got lost or put to the side. The main reason being regulators and major economic authorities didn't appreciate it. They didn't want privacy because it would enable, under their own story, corruption. It would enable kind of crimes and stuff like that, right? But I think since then, it has also become avidly transparent that privacy is extremely important to have, especially when it comes to your finances, especially when you kind of like enable a financial system 2.0, right? Okay, so then what's the reality of this becoming, what's the practicality of this becoming a reality in our future? So I just spent about 5 minutes on this episode explaining why it's taken us so long to go from tokens are absolute scams to, hey, maybe we'll consider this as some kind of equity through the Clarity Act, right? Privacy comes right at the end. Privacy is like the privilege that we get, the cherry on top of the cake that we get right to the end, because that's the last thing authorities want to give up. Why? Because they want to have some sort of control and surveillance. We've seen it with like Signal and the Telegram debacle, right? Where you've got the founder being put in jail or being forced to add a loophole so that the FBI, CIA, or whatever intelligence authorities can get access to these different kinds of things, right? So it'll come right at the end. Now, the only bullish narrative that I can see accelerating that timeline to bring privacy into crypto and in finance in general earlier is if we can get ZK compute to like improve massively and scale to a point where it's like super cheap and easy to integrate into anything. Because in that way, we can have privacy whilst also not exposing people's stuff. Like we can still validate that they are a US citizen without revealing who their name is or what their age is. We can reveal what their dietary preferences are and their medical data without revealing their names and giving off like kind of personal information. If that happens through ZK stuff, then I can see privacy becoming more of a narrative. But otherwise, I don't see this happening until post tokenized equities and stuff like that.
I think that's a fair take. I agree that it feels like the cherry on the cake. I do think that, and we've even seen some of the L1s say, we're going to roll out privacy features once the chain is almost complete, or like as one of the final things we're going to do for ETH or Solana. I do think there's a need for privacy. I don't think Zcash is going to be the only option to get there, but I can see why privacy as a theme. I'm based in the EU, UK. Both of them have come through with pretty heavy-handed rules around, potential rules around ownership of crypto, and that you'll have to basically do KYC if you own, I think it's £10,000 of stable coins, or 20,000 in the EU. I forget the exact numbers, but in a year's time, that's only going to be even stronger. That we're going to have some element of privacy, I think, in crypto. I just see that in many different parts of crypto at the moment. As we become more like TradFi, or get more TradFi people involved, privacy becomes a stronger narrative. But maybe that is a case for this time next year. For now, Zcash did drop. It is having a slightly better week this week, but it hasn't been a great week for. Well, I guess we had a rebound. ETH has been back above 3K. Solana's kind of still above 130. All hope is not lost just yet, but it does still feel like crypto's the whipping boy for global markets at the moment. Let's maybe go to questions. I just want to say Real Vision is hosting its crypto gathering in January. It is between January 22nd to 25th in Miami Beach. I will be there. I think OSF is going to be there too. You can get your tickets at realvision.com/crypto gathering. It's always a great event, so hopefully see you guys there. Okay, we'll go to a few questions. Just write them on Real Vision or YouTube or in the Twitter comments. So Cicinho 80 on YouTube says, do you think we're going to have another leg up in crypto before the end of the year? My view on this has been slightly evolving. I did think we were going to have a Santa Claus rally. I thought we'd hold like the 50-week moving average, and we kind of didn't. Now I'm just not sure. Like I thought we would regain the correlation to gold M2, which has been broken now since kind of the middle of the year, and I'm not banking on that, at least for now. Like I'd like to see some Bitcoin get above, let's say, 100K again, to really kind of want to aggressively get back into the market. I think for now, I'm just waiting. I'm actually more looking for like bottom signals rather than we're just going to rally through to a new all-time high. Like I'd like to see us test kind of that 80K level again to see if it would be a very strong bottom. And then if not there, then I think I'd be looking, like I said, for kind of the March level or April level, which is around in the mid 70s. And then who knows after that. But those are like my levels. I'm more looking to buy dips at this stage because that's what I think the market's going to do rather than aggressively rally. I don't know if you have a strong view about like the direction of the market. These things are really difficult to judge.
No comment. I agree with a lot of what you just said.
Okay. This is an interesting one. Trader 5223862, great name, on X says, what's an effective way to get portfolio exposure to robots for the next 5 to 10 years?
Great question. Great
question. This is a very interesting question. It feels like, I'll let you answer it, actually. You must have looked at this a lot.
No, I'll be quick. So I've been thinking about this a lot because I think we are well underway in the AI trade. Everyone's buying Nvidia or Google or whatever that might be. But then my thought kind of jumps to what's the next kind of early AI trade that you might be able to access. And I've settled on the answer that it is robotics. It is the physical manifestation of AI, which I think will come in humanoids for the consumer side of things and replacing factory workers, etc. And then just general robots, which the likes of automated cars like Waymo and Tesla can fall under, and other things that don't just look like a Terminator robot, right? There are a few companies that kind of either directly or indirectly address this. And some of them are probably going to IPO over the next couple of years. But like the current publicly accessible ones are Tesla. Tesla's the obvious one. And then you have Amazon, and then you have Google, right? And so you're just like, well, Ejaaz, you just listed 3 of like the Mag 7 companies. You got to think about how big this market's going to be, and how much these companies can claim that market share over the next decade. It is going to be nothing short of massively overwhelming, right? People haven't quite factored in having the level of a PhD kind of scientist in a humanoid robot and what that person can do being practically mobile and that thing can do being practically mobile and everything. Tesla is really ahead of the curve on this. They have so much data coming from manufacturing operations at Tesla and through their robo-taxi service, which they're rolling out right now, that they can just kind of weave into any kind of humanoid robot. And they're well on track to producing their Optimus humanoid robot sometime at the end of next year, right? So prototypes are already out. On the Google and Amazon side, it's less obvious because people are like, well, Google's never created any robots. Well, they have the Waymo service, remember? And then they have an entire robotics AI department, which they've been focused on different types of robots, but most importantly, robot AI models. These are like, think of like ChatGPT, but the model equivalent being run in robots. They are like one of the leaders. Then Amazon specifically, and this is like the most boring, unsexy answer, which is usually ends up being the most profitable side of things in my trading history, at least, is these guys are warehouse fulfillment experts. They are the single company that has moved the most amount of atoms in the world. That's something my co-host Josh loves to say a lot on the Limitless podcast, right? They have all this data from people that are wearing kind of like automated glasses that kind of pull in all this data from their employees, and through their own robots, which they've been running for the last decade in their warehouses that sort and package different things. So I think they're going to be a major player in the robot space as well. Sorry, that was a very long answer, but those are my takes.
I didn't really realize Amazon were in that market as much until you've just said it. Obviously, I knew publicly that Tesla was and Google was, but yes, it does make sense that Amazon would be, particularly for like functional or workplace robots, they would be up there. And then in private markets, are you involved in any of those deals? Any things that we would, like you said, you'd expecting some things to IPO soon?
Yeah, I'm involved in the Figure startup. I don't know if any folks have heard about that, but it is led by this guy called Brett Adcock, and he think of him as like the pioneer in American-made robots, aside from like the obvious Elon Musks of the world. He's created this really cool, slick humanoid robot, which it goes beyond just like the fad and clickbaity titles. It is actually functional. We will see. They are starting to roll out next year. And so I'm excited to see what that actually functions. What this will look like is literally a humanoid robot in your apartment or in your house that can clean the dishes, pack your groceries away, stuff like that. I think, it's going to be one of those things where it's like a luxury kind of item, and then it'll start scaling into becoming a normalized thing as costs are driven down. But then someone might respond to that and be like, well, whatever. They actually have humanoid robots in factories, specifically BMW right now, that have been working 24/7 for the last 4 months. There's actually a live stream of this, which they occasionally make public, of their robots literally just doing a bunch of operational controls in BMW. And that is happening right now as we speak. So I'm bullish on that company. There are a few others that are coming out, which are kind of like more early in their iterations, but that's probably the one that I'm most excited.
Nice. Okay. So Pob Basson on RV on Real Vision says, what if you are still holding a heavy alt bag with losses at the moment? How would you approach this? Well, obviously that's a pretty painful position. So I apologize for what's probably been a pretty horrific last month. I would say that luckily there is a silver lining in that Bitcoin dominance has kind of stayed around the same sort of level even during the sell-off. So you're not, for once, you're not really holding a bag where, oh God, like Bitcoin has barely moved and my altcoins have moved a lot. Bitcoin's moved a decent amount too here. So I actually think the perfect thing would to be moved back into Bitcoin. That's what my gut would say. With altcoins during a bear market, or let's say a downward trending market, I don't think we're quite in a bear just yet. It's very difficult to have any sort of rational price target about where anything would bottom compared to like Bitcoin normally has quite clear levels, right? Well, this could be a formation of a bottom. With altcoins, it's much more difficult to do. So, if anything, I would say that it's just be thankful that Bitcoin dominance is at this little level, so you can move back into Bitcoin and still feel you have decent upside in whatever trade there is still to happen. If you are going to hold altcoins, I do think this is the sort of market where certain specific things could break out, like we've seen, and we see this often during weaker periods that like one altcoin or two altcoins will have monumental runs, very much like FOMO style runs, like we saw with Zcash. So I think it's also good to keep powder dry for those rather than holding something hoping that it would rebound. My gut tells me that if Bitcoin goes even lower from here, let's say it goes to like mid 70s, that Bitcoin dominance would go higher in this next leg. I think the first leg of this was the DAT trade being questioned, and MicroStrategy, although I don't think it's like incredible at this stage, the fact that they have 2-year runway for cash kind of puts them in an okay spot. I would say that a lot of the other DATs for altcoins, they're going to be tested here if we start to head lower and MNAVs go below 1. And I don't think they necessarily have the ability to raise cash to like pay dividends. Some of them won't have that sort of need for cash for interest or dividends. Some of them will. But they will, if they start to trade significantly below MNAV, I think there'll be questions about like, why are we even doing this? Let's just shut this thing down. And that can get messy for things like ETH, maybe Solana, some of the other DATs. What do you think, Ejaaz?
Yeah, I mean, listen, I have been in that position countless times in my investing career, so I can empathize with where you're at. I largely agree that like I think now is probably the best time to kind of be more defensive than offensive. I think if you still want to be in the market and be cautious about it, just buy Bitcoin. It's never easy. Like like selling the top is just an illusion and a myth. No one actually ever ends up doing it, so it becomes more of like a psychological game. Like, can you control your emotions and can you kind of cut losses when it needs to be, and kind of like realign yourself from your investment thesis and figure out what you want to kind of like invest in long term. There are different types of traders as well. There are short-term traders and long-term traders. I don't know which one you are specifically. I'm more of a long-term one, so I kind of like find investments that I can buy and hold for years and not even look at the charts unless my thesis gets kind of invalidated. But yeah, I would say be more cautious. I agree with you, REKT, that it is we're nearing somewhere where like it's kind of peak a depression, and so that usually implies we're getting somewhere near a bottom. But I think there might be more pain to go, purely because we haven't got that kind of major narrative around crypto aside from like some of the deeper financial stuff.
Yeah, I agree with that. Okay, let me just see if there's any more questions. While I head on YouTube, final question. Do you think tokens as equity is the next crypto problem we have to solve as an industry? I don't know if that's necessarily a problem or an asset. Tokens as equity for me, feels like like maturing of the industry. I think the other side to that is that the ones that are not built on revenue or are built on revenue, but the multiples are very, very high, slightly get exposed. Like we just spoke about this debate that happened this week, which is kind of a question about whether L1s can really be valued at these sort of exponential valuations. No one was asking that about Hyperliquid because Hyperliquid doesn't trade at some unbelievable multiple. It trades at I think it's less than 10 on current market cap and not much higher than that on diluted, probably like 30 or 40 versus hundreds to thousands. I think that question needs to happen in crypto, if I'm honest, because like if people are buying are you buying it because of the fee multiple, or are you buying it because you actually think it's a store of value? Those two things are very different. And I think sometimes L1s have conflated the two. Something like ETH, for example, with the burn, has tried to do that in certain moments. So you could say, well, ETH is really a store of value, but also should it be a fee multiple? But the ones that don't have that, and let's say there's a lot of L1 tokens out there, and a lot of other which just have high inflation and some loose fee mechanic. I don't know if a lot of that can be justified at the high multiples. So I think this move to tokens as equity is going to be very good for some tokens and expose some others. Basically, that's my take on that.
Well said. Yeah, I spoke about this earlier on the episode, so I won't belabor the point, but I am very bullish tokenized equities. I think it is crypto fulfilling one of its maybe not official, but more unofficial promises, which everyone's been buying tokens for years, saying that like, kind of this should be representative of equity. We're finally getting there. It's going to take a bit more time. Ultimately a good thing.
Good. We have a bright spot at the end. Okay, guys. Well, that was REKT Vision. Before we go, we've got a question for you. Are you bullish on crypto or more bullish on crypto or AI in 2026? Let us know in the comments. Obviously, follow us on X. I'm at REKMando. I think Ejaaz, is it Punk?
CryptoPunk
CryptoPunk
7213.
7213. Next week, we're going to have drinks with OSF and myself. Thanks again, Ejaaz, for coming on. It's always a pleasure having you. Join us on next week, Friday at 10:30 a.m. Eastern, 4:30 p.m. GMT. Have a great weekend, guys. Thanks for tuning in.
Thanks, guys.